Hey, it's Zane. Welcome back. Hope you're having a great day. Thanks for tuning in once again. And before we get started, as always, please give the video a like. It's a free and easy way to support what I'm doing, to support the channel, and to help get the content out there. Now, today I want to talk about real estate versus Bitcoin. And I want to highlight some of the key features. I've written down about 5 points here that I want to refer to. And it really highlights to me why it's important now when we're thinking of how to, dedicate capital, where to allocate it in terms of securing our wealth, financial future, compounding our gains, all of those kinds of things, why Bitcoin should be now part of the equation. And the first thing I'll say right up front is today is not about knocking real estate in any way, shape or form. I'm a real estate investor myself. I've grown up with real estate. I raised my kids in our own home. I'm a great believer in real estate. Over the long term, it's proven to be a phenomenal performing asset, not just for my family, but for the Australian population at large. I'm sure you will agree, particularly if you've been in real estate. But real estate has some problems now, and as we go through this conversation, some of those will be highlighted. But it's just important now that as we move into this digital transformation of value and wealth, and traditional assets start to become tokenized, and we end up with this growing wealth divide in society, this growing wealth gap, where only really the privileged top section of society will actually be able to own their own home and actually become debt free and not have a mortgage around their neck for their entire lives. It's only going to be a small fraction of society moving forward. And so we have to keep all of these things in mind when we're thinking about the future of real estate versus Bitcoin, which many say is digital real estate. And then it kind of helps us to make calculated and informed decisions that kind of make sense for where we're at and where we're going in our financial futures. So the first thing to realize is that Bitcoin is decentralized. Real estate is centralized. It's one of the most centralized assets that exist. And the reason for that is because every piece of real estate is tied to a title deed, which in turn is tied to the state, the government, the issuance of rates notices from local councils, land tax. All of these rules are in place. We have property rights, but we know that these rules over time can and do and will be changed. And we know that there are threats to those rights. And so even though we might have a title deed that has our name on it, we have to understand that in a changing economic environment that we're in a debt-based system that is kind of reaching the end of its life cycle, this 54-year monetary experiment called fiat currency, which really went into full flight in 1971 when the currencies of the world were severed from the gold standard. We're at the end of that life cycle now. We know that because of the amount of debt that's in the system and the fact that inflation is running away and is creating this growing wealth gap, and they need to create more currency to keep propping up the debt so that we don't have a situation where the level of debt is not sufficient or there's not enough collateral to support the debt. And so they've got to keep inflating the real estate prices in order to keep the system alive, because we can't have a situation where the people of Australia who own real estate, where their houses go down by 25 or 30%. The whole system would collapse. So we need the purported value of that real estate to continue to hold so that it supports the amount of debt that's in the system. And the only way to do that is to keep inflating house prices through creating more debt in order to keep the whole Ponzi scheme going. So that's the first thing. When we own real estate, we are a part of a centralized debt-based system, and we know that the rules can be changed. With Bitcoin, it is completely decentralized. There are rules, but there are no rulers. There's nobody who can actually change the rules when it comes to Bitcoin. And so I'm not sure about you, but when I'm thinking towards the future, for me, that's a very, very powerful attribute to have wealth and value stored in an asset where I know the rules can't be changed. And we know that we're in an environment now where rules are constantly changing. We know that, at any time, new rules can be imposed that might impact our assets, our wealth, the way they impose different regulations and taxation and rates and insurances and all of the things that are part of this centralized system. But with Bitcoin, we don't have to worry about all of that because it is completely decentralized. So that's point number one to keep in mind. When you join the Bitcoin network and you acquire Bitcoin and you take it into self-custody, you are really the custodian of your own wealth in a decentralized network that cannot be changed or altered in any way, shape, or form. The second point is when we look at compound annual growth. So we look at the wealth creation and preservation potential. It's really interesting to consider the growth rates of real estate versus Bitcoin. Now, I know with Bitcoin we only have a 16-year price history to go by, and real estate, we can go back, the last 100 years if you like. But interestingly, as an example, there's a property just a couple of suburbs north of where I'm sitting right now, which just this weekend has just sold for many, many millions of dollars. And the exact figures are this property, this piece of real estate, which is a beachside piece of real estate, in 1976, let me get that right, yes, 1976, this property transacted for $54,500. It just sold, just this weekend, for $11,600,000. So $54,500 in 1976. This morning, it sold for $11,600,000. Now, what's really interesting about this is when you actually plug those numbers into this CAGR calculator that I keep telling you to go and start plotting some facts and figures in for yourself. So if you go to CAGR, C-A-G-R, calculator.com or reverse CAGR, calculator.com, and you can either work the numbers forwards or backwards, but when you enter the numbers in that I just explained for this piece of real estate, have a guess what the CAGR is over the past, how many years is that? 49 years. 11.31%. 11.31% over 49 years. Now, what's really fascinating about this is that the rate of currency debasement since 1971 is about that. It's somewhere between 10 and 11% historically over the last 53 years. And so the question then becomes, due to inflation, currency devaluation, that house actually really hasn't grown in value when you take into account true inflation, which is the rate of currency debasement. And so in other words, that $54,500 sitting there in 1976 to purchase that piece of real estate, when you take into account the dilution of the value of the Australian dollar over that period of time, this $11,600,000 transaction today, all it's really done is kept up with inflation. And I know that's really difficult to get your mind around, but I'm going to explain to you why this is important when we start looking at a far superior performing asset in Bitcoin, and why you might consider moving forward into the future Bitcoin as a store of value as opposed to real estate. And if you listen to Peter Dunworth, who again I explained about Peter yesterday, was talking about superannuation, how the correct allocation to superannuation in terms of Bitcoin, if you have a more than 10-year time horizon, the correct allocation is 100%. And so he's a Bitcoin bull. But he also explains about how, this 100x that Australians have managed to achieve on real estate, since 1970, So people who've owned real estate since 1970, they've essentially been able to, across the board, achieve about 100x on their investment. All that it's really done is kept up with inflation, but moving forward, that opportunity has passed. So for the next generation, millennials, Gen Zs, etc., they need to be looking at the next 100x opportunity, and that's what Bitcoin represents. And so real estate, many believe, is going to return to its utility value. People are going to start to wake up and realize that there is so much wasted premium in real estate when you consider all the layers of unproductive value that go into a piece of real estate. The conveyancing, the real estate fees, the stamp duties, the insurances, the maintenance. Most of that is a complete black hole, but it's all inherently priced into the price of real estate, even though it doesn't represent any true value. And so we have to keep that in mind. As people start to wake up and realize that real estate is inflated beyond its true value, the price of real estate does not equate to its true utility value, and more capital starts moving from real estate into a better performing asset in Bitcoin, the price of real estate is going to fall to its inherent utility value, its marginal cost of production, rather than all of this inflated speculative store of value level that we've had over the last, really accelerated in the last 20, 30 years. So let's think about Bitcoin. We know that Bitcoin over the past 7 years has done 59% CAGR. Over the last decade, it's around 50 to 55% CAGR. And so already, if you plot that, and I know we're talking about a 49-year time frame, but pretty much everybody acknowledges that if you own real estate for at least 15 to 20 years, we know that on average it grows about 10% a year. So that 11% for that piece of real estate, even though the numbers are a little bit mind-boggling at first, when you actually look at it over the course of that 49, 50-year period, it's actually not that mind-blowing at all when you consider that we know historically Australian real estate tends to double every 10 years, which is essentially 10% a year. And that's exactly what that piece of real estate has done, just a little bit better than that. Bitcoin, the reason why Bitcoin is anticipated to far outperform that is because it is truly scarce. It is absolutely scarce. We know that there are only 21 million Bitcoin. And this is why Bitcoin is repricing real estate, because it is absorbing value from the less scarce forms of assets, and real estate being one of the less scarce forms of assets, and stocks and bonds and currencies, which are more of an infinite source of assets. Bitcoin being the scarcest, it is absorbing the most value, and this is why Bitcoin's price is superior price performance, and this is why it continues to be the fastest horse in the race. And so when you look at Bitcoin's CAGR, whether you want to call it 50% over the last 10 years or 59 over the last 7 years, you start to plug in some of the numbers like I explained in yesterday's video, and you realize that, even if you put $10,000 in today, where it is in 20 years, it's in the millions of dollars, where if Bitcoin continues to perform in that 50% CAGR plus. And so, Bitcoin is outperforming because it is more scarce. It is repricing real estate. We purchased a piece of real estate 3 years ago. It was $1.5 million. At the time, Bitcoin was sitting at around $30,000 a coin. So in Bitcoin terms, the price of that real estate was 50 Bitcoin. Today, that piece of real estate is worth around 2 million at today's market value. So it's gone up 33% thereabouts. But today, in Bitcoin terms, the price of that piece of real estate at 2 million is around 15 Bitcoin. And so even though just over the last 3 years, a piece of real estate in Australian dollars has gone up, 30 odd percent, in hard money terms, the hardest form of money that exists, i.e. Bitcoin, the price of that piece of real estate has actually fallen by about 70%. So it's gone from 50 Bitcoin to 15 Bitcoin. And so this is why people who are in real estate and in Bitcoin and are really studying more about, you know, Bitcoin's performance, people like a developer in Europe, he's been on a number of Bitcoin podcasts. I think his name is Leon Wankum, Wankum. Look him up. He was on Bitcoin with Bram about a month or two ago. Again, prolific, I think second or third generation property developer in Europe. And he talks about how Bitcoin is just going to eat real estate alive moving into the future. And I've referred that interview to a couple of people who I've consulted with who are in real estate and have, you know, made a lot of their wealth out of real estate. And they were blown away by the insight that they got from that particular interview. So look it up if you're interested. So CAGR, Bitcoin is outperforming real estate. Yes, real estate has a far longer price history, but when you consider the utility value that many anticipate is going to see the price of real estate start to fall as more capital starts to move into Bitcoin because of its performance, because of its scarcity, we're going to see a great shift in terms of the value proposition of real estate versus Bitcoin. The other point to realize is that with real estate, there are many attack vectors in place. We know that we live in a very litigious society. We know that you know, real estate gets tied up in disputes. You know, the first thing lawyers want to know if you're trying to attack somebody is, does the person that you're trying to attack, do they own any assets? Do they own any real estate? And quite often those assets that person holds are the subject of proceedings. And so, you know, we know that in this centralized system, if you own real estate, you are certainly open to attack. Yes, I know you can put things in your wife's name. I know you can put things in trusts, and that can, you know, mitigate the exposure that you have. But the reality is that nothing is really off limits when it comes to assets in the centralized system. So we know with Bitcoin that none of that is possible. If you take Bitcoin self-custody seriously, nobody can access your Bitcoin. It is not the subject, or cannot be the subject, of confiscation or seizure in any way, shape or form. It's an impossible asset to confiscate or to make the subject of proceedings if you've secured it correctly. So that's an important point. And, you know, probably the next most important thing is the fact that, you know, with Bitcoin, you know, there's no hassles, there's no tenants, there's no middlemen, there's no agents, there's no maintenance, there's no insurance. You just eliminate so many headaches that are associated with traditional real estate. With Bitcoin, it's just this pristine collateral that just sits there in cyberspace. You don't have to worry about it. There's no depreciation. It doesn't degrade. It doesn't require any kind of maintenance. You don't need to insure it. And so it's really a headache-free asset that you just don't have to worry about. You can sleep soundly at night knowing that it's going to be there in 10 years, 20 years, 100 years, 1,000 years. That's the other benefit of Bitcoin. No neighbors to worry about, no highways that potentially could be built you know, a couple of blocks from where you live. This suburb that we're in now, everybody's worried about the local government wants to put trams in to you know, reduce some of the traffic and all of that, and a lot of people are up in arms about that and what that might do to their real estate prices. Bitcoin, you don't have to worry about any of that. And probably the final point I want to make in this video is the benefit of asset portability. Asset portability. Imagine being able to take your wealth with you at the drop of a hat at any time, anywhere around the globe, without the need for waiting, divesting, engaging anybody, permission from anybody, no counterparties required. You can just take your wealth with you. You've got your seed phrase, you've got your hardware device. You don't even need that. So long as you've got your seed phrase and your passphrase, that's all you need inside your head. And you can go anywhere in the world and take your wealth with you, and you have pretty much instant liquidity. You know, we know that Bitcoin is the most liquid asset on earth because it trades 24/7, 365. So at any time, if you needed to liquidate some of your Bitcoin anywhere in the world, you can do that instantly, unlike real estate. So at the risk of going further here, I think I want to leave it there. I've made some key points there. Let me know what you think about what I've had to share today. Do some of these points resonate with you? Have you got anything to add? Is there anything that I've missed? I'd love to hear your thoughts on it. Bitcoin versus real estate is a great discussion, and one that I'd love to hear your thoughts on. Please remember to like the video, share it with anyone you think may be interested, and please subscribe if you haven't already. And I look forward to seeing you in the next one. Thanks for listening. This is Zane signing out. Bye for now.